Hey, everybody. Welcome to another episode of Blockchain Banter Trading Crypto. I'm Jen. I'm your host. I hope you all had a wonderful extended 3-day weekend. Keith Allen is here with me. He's the co-founder of Material Indicators, TA and algo trader, order book analyst, recurring weekly guest of our trading calls. So wonderful to see you, to speak with you again, Keith. Thank you for being here.
Thanks for having me. I always
Of
enjoy the
course.
call.
Mark is going to be a little bit late. He will be joining us. So
Okay.
I had a couple of things I wanted to actually kind of ask you both about. So we'll wait on that. Maybe. Well, first of all, did you enjoy your weekend? Did you step away from the charts a little bit? Were you
I
able
did.
to?
I stepped away from the charts for a little bit. I went fishing
Good.
with my brother, which was nice to do.
Nice.
Dodged the nasty weather we had on what day? I don't even remember what day. Maybe it was
You
Sunday.
guys have been, I don't know about your specific area, but I know generally, you know what I mean? Like it's not, I've been hearing some pretty ugly things about where you're at. So
We,
hopefully you are
it's
staying
just been
out of
like
that.
crazy. Like the forecast, the you look at the radar and it says it's clear, and then an hour later it's a severe lightning storm. So I don't know what's going on there, but um, we had some nasty weather Sunday morning, and then it cleared up and took advantage of a break in the weather and snuck out for a little
Nice.
bit, and then last night watched some football, and that didn't go so well. Um,
Well, you enjoyed your weekend up until that point.
yep,
Speaking of
yep.
weather, I've realized how to get out of the like Arizona drought is to clean my pool. It is
There
a
you
no
go.
fail. I went outside. I'm like, I'm going to get some fresh air. I'm going to go. I'm going to clean my pool. I'm going to sweat. It felt so good. And I was all ready to go swimming. And then, of course, we had our own thunderstorm and winds and rain on Saturday. So it felt so good. I got to do it all over again on Sunday. But hopefully it helped because I'm in Phoenix and God knows it is dry here.
Yeah.
But I wasn't able to escape it. Hopefully I was able to help our situation a little bit, you know. Well, good. I'm glad that you enjoyed your weekend. I need to do a fishing trip myself. Have you been able to catch up a little bit on the charts then? I'm thinking, I
Yeah,
mean, we're into the
we
afternoon.
had
How
some
long can you really stay away, right?
not long enough. Um, Yeah, we had some interesting, dynamics coming into the order book as we headed into the weekend. We really saw some, on fire charts. We really saw some um, liquidity moving down to suppress price, and I'll share that with you.
Yeah,
Let's
a good amount of liquidity. I mean, enough to catch your attention, right?
it do, right. You'd be surprised at how little it takes to move price, but we we had this block, and this was. Let me brighten things up a little bit for us. Uh, Friday heading into the weekend, it felt like this was going to be guardrails here at 62K and at 58K, and then that night before like late in the afternoon, I guess, we saw things start to break up. A new ladder moved into place. And it's kind of staggered, so I'm not necessarily sure that this was the same entity, or maybe they're just trying to make it look less choreographed. But we saw this ladder of asks come in and really suppress price. And you can see right when it happened, when price was trying to rally out. Um, and this knocked things back for the weekend. And it's not uncommon to see this happen on a weekend, especially a holiday weekend, where you see these guardrails go up, and maybe it's one of the institutional entities that doesn't want price to run away from them in either direction prior to coming back on a business day. Market was
Yeah.
closed on Monday, and so I was really looking at this as suppression to keep things under control. Maybe the ETF guys wanted to, after having a brutal, really a bloodbath last week on the ETF side of outflows, maybe they were concerned that price was going to rally back to 65 and squeeze those shorts, which incidentally, I think I have a kingfisher.
You called that last week, by the way, Keith. Was that
Well,
last week?
oh,
It
the
was
first one,
not
yeah.
long after our call either. It was the liquidations. Yes,
Yeah,
you brought that. Yeah, that was wild. I mean, it was so soon after the call. It was like,
That did happen the same day. That was the longs getting squeezed,
yeah,
getting liquidated. And, then we had this series of shorts coming in, and I really expected this squeeze to happen. This was up to this in the middle of the weekend, up to about 65K. I think this was much larger. This was closer to 45 million in liquidations, potential liquidations up to this level. And as you can see, that number has reduced drastically, which indicates that some of these shorts were closed. Nonetheless, we have another cluster here in the near range. I I think these are ripe for the picking, but it just hasn't happened yet, right? And so that's something that I was watching over the weekend. I thought these guys were just luring in more shorts that they could liquidate, and they got some in, right? Here's some here, but
yeah,
hasn't happened yet, right? Meanwhile, the long side isn't really building all that much. That's something that we'll continue to watch. But as expected, we started seeing some of this resistance thin out here as we moved into the week. And it was a holiday weekend for us here in the U.S., but not for everybody else around the world, I don't think.
right.
Um, and so I've been, as always, watching the dynamic of liquidity. Would this 58K level hold? It's been threatened now, and it's been breached a few times. Um, my longer term view on it is still kind of unchanged. I feel like we have this support level here at the bottom, well, at our local bottom, around 50K. That was obviously broken a few weeks ago when we had that big wick down in the beginning of August. But I think that this needs to be retested. I think it needs to be tested to really validate it as potential support or potentially invalidated, right? So let's look at the candle chart and see what that kind of looks like. Um, we have we obviously had this wick down here, um,
Right.
49.5, and so that may very well serve as the bottom, but it hasn't been retested, and and so I'm looking for that retest to happen. Uh, if it doesn't hold, then obviously we have secondary support down here, just below it, and of course our trend line, which I think is even a stronger level of support. We've talked about that a lot lately, but we also have something different in the charts here. Uh,
Keith, can
yep.
I ask you a quick question? Can you go back to that previous chart? And this might seem like a silly question, but you're talking about retesting, right?
Hmm.
Now I
Hmm.
see a few wicks going down to that point. So what would it look like if it was actually validated? I mean, we can see one there May, then we have another one in June or July, then we have one in,
Well,
oh, okay.
no, no, no. You're looking at trend
I'm
precognition
looking,
signals.
yes,
Let me
I am. Now
let me
that you
clear those
zoomed in,
out
I
for
saw
you,
the little arrow. That's
and we'll
okay.
we'll talk about that. We'll talk about
And I'm
those.
thinking they're green. Okay. Nope, we're good. I'm following now.
Okay,
Now I
so
see
so
that one.
what this did test, kind of, sort of, is the um, consolidation we had here at 50K, right? And this
Yeah.
shot through that briefly, it wicked back through it rather quickly. So this counts as a support test to me. The fact that it broke it a bit um, makes me wish it had gone lower. Because we've been eyeballing these targets, this mid 40K target for a long, long time, right? We talk
Mm,
about that week after week. And
right.
so something that is new, this past, really, since last month, is we had, and this comes into play here, is we had a series of death crosses,
Yeah.
and some of them, death crosses are lagging indicators. When you have a series of them all in rapid succession, it's really an indication of how drastically and quickly prices degraded, which it certainly did. Right, we saw this after a failed attempt, a rejection from the 2021 top, and we've had more of those than I can count. After that rejection, things started to cascade, and then it was just amplified by this, or punctuated, if you will, by this um, big
Wick
wick
down.
down to 49.5.
Hmm.
And this was Japan had raised interest rates, the Japanese carry trade unwound, and that's largely believed, as to why this happened. And so these death crosses, something that, and especially this one right here, the last one we've had, between the blue 100-day moving average and the purple 200-day moving average. This is something that helps us often, historically has helped us find bottoms. And so it doesn't mean that the bottom is necessarily in, but it does mean that we could be getting close, right? And that if it's not in, then maybe we're due for a retest. And a lot of times we have seen this culminate with a double bottom of sorts, or a bounce off a trend line. So I would love to see a test of the 50-day moving average here. Give us a potential double bottom here. If that doesn't hold, then we test the trend line. And this is really the do or die for me, right? If we lose the trend line, then we have to contemplate the chance of going lower into a prior consolidation range, perhaps even this one down here in that 25 to 30K range, which is a viable target. This is where the whole move really started for me this year.
Right.
A lot of us viewed these as bear market rallies, distribution rallies. They obviously turned into something else, but it wasn't really validated until we had this consolidation period and the moving averages began to unwind here on this move up. But we've talked all year long, and I'm anxious for Mark to get in here and join us. We've talked all year long about the fact that none of these prior consolidation ranges ever got retested, right? We left this rapidly. It never got retested. We left the 40 to 45K range. It never got retested. We were in that 50 to 52K range briefly. It only recently got retested. And now we're up here in this red box, which I think is important to note, right? This to me looks like another consolidation range, an extended consolidation range. Yes,
right.
the series of lower highs and lower lows is concerning. Those are all very bearish signs, right? But at some point, those lower lows have to bottom out, right? It's bearish until it's not. It's bearish until it bounces.
That almost seems like it contradicts what you're saying, though, in regards to retesting. And with those 4 death crosses, I guess that brings up another question for me. With the 4 death crosses that we saw, you were saying, and I forget how you worded it exactly, how deep a correction we can see, right? How quickly, how drastically the market can change. It's kind of that sort of indicator, right?
Right.
We haven't really seen that yet.
Well,
though. I know we saw the wick.
This isn't like the moving averages. These death crosses and golden crosses are not fast. And we're now actually up to 5 death crosses.
5 now.
And but we do have something that's never before been seen on a Bitcoin chart, and that is a golden cross between the 100-week and the 200-week moving average. Right now, the lower moving average is crossing above. This has never happened in Bitcoin history, and so it's difficult if you don't have any history on it. How do you?
Now, generally speaking, something does have a golden history or golden cross history. What does that mean?
While death crosses are inherently bearish, golden crosses are bullish. And we can get some history by looking at the S&P 500, which fortunately has over 150 years of history. And it has had this move occur about 8 times in that 150 years. And each time it does help the market find a bottom. Now, right. So we also we had the other death crosses here on the daily. If I put those back on, we would see the death crosses just like we saw on the other chart, right? If I go here, then we'll see those. Let me find where my arrow was. We'll see that we had that same kind of drama in the chart in terms of death crosses. But finding the golden cross, right? It's an indication that things are are moving the other way. And I'm scrolling a lot because there just haven't been a lot of them. And now it takes me longer to find them here on the daily chart than I could on the weekly chart. But here's one, right? So we had all of this winding of the moving averages, right? Here's the 21 breaking down through everything like we had recently. And this is where that golden cross happened between the two higher moving averages, and it led to an eventual bottom. Now, whether that bottom is a local bottom or leads to a full bear market remains to be seen. And the thing that we have to watch for is rejections on the way back up, right? You see this rejection, it was like not done yet, went down and bounced back. I can find you more examples of this where we had the golden cross, we found support, and then moved on. And so in a lot of these instances, well, I won't say a lot because there haven't been a lot of them all together, but
right.
This is, in this instance, we can see things were breaking down for an extended period of time until the market found its footing. So there's so many variables between, I'm now back to 1977, right? There's so many variables that could be different between what's happening here or during these time frames versus what's happening now in the world economically,
right.
geopolitically, et cetera, inflation-wise, all of the above. So it's not an apples to apples comparison. My point is, after we see these series of death crosses, we do often find double bottoms that help the market bounce. And so that's what I'm looking for now, is a double bottom off of that 50K range, or at least a test of it, right? Test it.
Yeah.
If we hold there, that could be really, really interesting. We would then, of course, want to see price on the recovery. We would watch to see if we have a rejection here from the 200-day moving average on the recovery, or if we can break through, get past this mid-cycle top, and then start going back after all-time high territory. A lot needs to happen between now and then, and it's, in my opinion, impossible to forecast with any confidence that, hey, this is exactly what's going to happen, which is why we have to continue to watch the charts and continue to see how things develop, not only in terms of the technical indicators, but in terms of where the liquidity is moving, and also what's happening with the economic and the geopolitical situation. We know we have a rate cut likely here before the end of the month. The FOMC meeting is scheduled for like September 18th is when the announcement is. Obviously, the Fed has been telegraphing towards that. But between now and then, and these, I think, are going to be very, very telling numbers, we have economic data coming out, especially this week. And sure, there's we'll get some breadcrumbs along the way that will feed the volatility, the intra-week volatility, or intra-month volatility, if you will. But for me, the big number that I'm watching, and the big numbers that I think the Fed is watching, is right here, the unemployment rate. Some may say non-farm payrolls. I think this is the big one in unemployment. But this all kind of feeds the same narrative. Average weekly hours, participation rate, et cetera. And so we know we're at we had a bump up in the rate of 0.2% a few months ago, and the market did not like that news. So what the Fed is trying to navigate now is they're trying to thread a needle and navigate us into a soft landing. They told us at the last presentation in Jackson Hole that they do not welcome any significant increases in unemployment at this stage. They don't seek or welcome. Well, we know they were seeking some of an increase to trigger, making rate cuts. They got their increase. So now, are they able to control this? Is it under control? Historically, we see big spikes, right? When it starts to go up, that momentum continues. So I think we're in the good news equals good news phase of these numbers, these particular numbers anyways. And so I think that a flat number would be welcomed. The market would say, okay, that makes sense. We and maybe inflate and maybe unemployment is in control, and maybe the Fed can keep it from spiking with a series of controlled cuts. However, a if we see it drop, well, that might be welcome too. But I think it also opens the door to more scrutiny over the accuracy of the numbers, which has been something that has been debated all year long.
Yeah.
Um, if it goes up, say 0.2%, so that would take us to a 4.5% unemployment rate. I think that scares the hell out of the market, and we think hard landing, and uh, and if it goes up maybe 0.1%, I think that also is open for interpretation in the context of these other numbers around it. So,
Right.
um, who knows? I don't pretend to be an economist, so I'll let other heads speak to that. But just the way I'm viewing it right now, uh, I'm I'm watching for. I'm actually hoping for a flat number that would maybe support the idea of a quarter point rate cut, 25 basis point rate cut coming up in at the end of the month. I I I have mixed feelings about the size of the rate cut. I was really kind of under the impression that if they went to a 50 basis point cut, then that may elude to the fact that there's greater concern over a spike in unemployment and potentially a hard landing, and the aftermath of that is not going to be good.
So, Keith, how does someone they're watching this? I see 8:30 Friday, right? We're
Right.
talking about what could happen potentially if this news goes either way. How would somebody take this and prepare themselves in terms of trading what the news may be?
All right. So trading the news is can be
Or getting
tricky.
ahead of the news,
Right.
right?
And this is where we see, especially around these events, is where we see a lot of moving around in the order book. And
Hmm.
so, number one, watching the dynamic of liquidity, right?
Yeah.
We had just pumped up and now we got knocked back down. Watching the order flow of the CVD here to see who's buying. Whales are not currently buying. We're actually seeing smaller order classes.
I was going to say, we don't
Do
normally see green up there on top, right?
right. We're seeing some of the smaller order classes do a lot of the buying, and you know obviously retail is heavy in those order classes, but there also may be some degree of whales utilizing those smaller order classes not to telegraph what they're doing. So you can't say it's
Right.
100% retail. Um, volume wise, it hasn't been huge volume. So I think it's a mix. Um, One of the things that I could tell you that on the last report a week ago, the jobless report, we saw literally, actually, it wasn't the jobless report. I was speaking of when Jerome Powell was speaking from Jackson Hole. His dovish tone. I mean, literally on his first sentence of his remarks, uh, we could see all of the CVD going vertical, all classes going vertical. That was very, very easy to see,
Hmm.
and it was a very easy buy order. And so, it was a very, very strong buy signal for me, and I bought that trade and took that swing. Um, so those are things that you can see mechanically happening in the order book and with the order flow that can help you out on that. In terms of rate cuts, there's a lot of history on that, and I did an analysis on that a while ago, and I'll probably do another one as we get closer to FOMC day to look at the history of how markets have reacted to those rate cuts. Quite often, we'll see price pull back, at least initially, before we see a recovery. But in other instances, uh, a sign of a deeper correction. In those instances, it's really correlated with that spike in unemployment and the outlook beyond it. Right? Are we headed for
Yeah.
a deep recession? And so, This unemployment number, I think, gives us a pretty good litmus test on what. Hey, Mark, nice to see you. Coming in right at the moment that I use scientific terms like litmus test.
He heard his language.
I think that
I also heard deep recession. My spider sense was tingling, so I decided to join the call.
Oh man. So yeah, I think that those Mark, we were just talking about unemployment numbers coming out on Friday, and I think that is going to be a signal that could potentially shape the trend heading into rate cuts here at the end of the month, or towards the end of the month, and or potential rate cuts, I should say. I think it's pretty close, as close to a sure thing as we could say. There's no sure things in this game, but seems like it's imminent at this point. And I think that could shape the trend. And if we have a decent unemployment number, I told Jen earlier, I think we're at the good news equals good news phase. If we have a decent number, then maybe that speaks to the outlook post cuts, meaning softish landing, versus if we have a hot unemployment number, there's more fear over a hard landing and a deep recession. There's that word for you. Enjoy it. And potentially a higher cut here to start things out in September could also speak to the fact that, hey, maybe there's more concern over that hard landing. Mm-hmm. Those things, I think, kind of shape our trajectory moving forward.
Yeah, I agree. And it's not like it's not even that like a hard rate cut is necessarily going to precipitate any softer landing. I think that a lot of people get this wrong. It usually signals to the market that the government is worried, and that can make the markets nervous. And so, yeah, I'm not even sure what I'm hoping for at this point. Obviously, we want a soft landing. What I mean is I'm not sure what I'm hoping for and how to precipitate that. But let's hope that the unemployment figures aren't too bad. But they are, they're trending up. Everything looks pre-recession. I think by almost every signal, and it's gotten to the point now where everyone I feel is, everyone who I think has an educated view of things has like the conclusion that we're entering into a recession has now long since gone. And it's now what kind of recession, how bad is it going to be? How quickly is it going to come on? That kind of thing. And in terms of market outlook, that's generally not such a good thing. But remember, there are others, and the people that I just spoke about included in this set, that are happy to point out that sometimes heading into a recession is when the market rallies the fastest. We've seen this again and again. Prior to like the dot-com crash was when the market had some of the the best performances of recent decades. Leading into the 2008 financial crisis, leading into the COVID recession, like things were doing pretty well. So things can still get hot just because we're just because we are nearly certainly heading into a recession doesn't mean the market doesn't have any upside left. I don't think it does. And I've been saying this for weeks, that I think that things are going to start trending down more and more violently, but it's not certain. I'm really not sure which way it's going to go.
I knew I shouldn't have hooked you up with XBT.
Yeah, I think that the ups, people buying here should be, I think, wary of the fact that the upside is diminishing and the downside is looking pretty catastrophic. Like that's my perspective on it. I have been saying that for a very long time, and I basically haven't changed my view.
Well, the upside is diminishing. No argument there. The question is what we're seeing actually a extended consolidation? And if we look at it on the monthly, right, is it an extended consolidation? Yes, the lower Jen and I already spoke. The lower lows and the lower highs, there's nothing bullish about lower lows and lower highs. But one of those lower lows has to become the last lower low.
Correct.
Is this
Yeah,
it?
it's still a bull flag. Like that. These descending parallel channels, they are bullish reversal patterns. But the question is, like, how deep can it go? And these things don't always break up. Like, just because something is traditionally, this would be a bullish continuation pattern.
Right.
And so you would expect it, because it rallied into it, that it's going to rally again out of it.
If we look at the history of these, extended consolidations, I mean, this one had lower lows and lower highs.
Right. Yeah, exactly.
This was lower lows and lower highs. And so, the question is, does it break down even further?
Correct.
Into full bear market, or is it just a consolidation and correction? And the different perspectives. I think one perspective that I think has macro implications is whether or not you still subscribe to the halving narrative. And if you subscribe to the halving narrative, then what we've seen is a mid-cycle top, and this recent, our recent high is a mid-cycle top potentially, and we could see more consolidation, more correction between now and when things really recover, and that would have the halving side. The halving narrative has the market topping somewhere around between Q1 and Q2 of 2025. Now, there's lots of reasons to argue that narrative is dead, or that this time is different, and it might be. ETFs might be part of that. A COVID recovery, part of that. The geopolitical situation, part of that. An election year, part of that. All of these variables are coming into play. So, we could sit here and speculate for hours, or we could just look at the charts and know what our validations and invalidations are. And for me, if we lose the trend line, then I have to reconsider where I'm at. But as long as we hold above the trend line, then I can't give up on the conviction I've had, for so many months. And so, the fact that this 21-month moving average is pulling up closer to the trend line is interesting to me. The fact that we've had this consolidation is interesting to me. The fact that we have, on a longer term view, seen that purple whales are still largely, sure, there's always some selling, right? There's always some profit taking, but largely they have accumulated. Now, brown whales had started selling a bit more after that last rejection from 70K, as have purple whales, but they came back. And so I have to wonder if this is just another dip, and whether they will make their own lower low here, or this is it, and we'll continue on this trajectory.
Keith, you had said whether or not, this is invalidated with the possible recession and it being an election year and everything else, right? Like the halving.
Mm-hmm.
Wasn't the last an election year and COVID? Right, that still played out. This is a little bit different though, with different factors or additional factors coming into play.
Yeah, I mean, I think every market has its own set of variables that can influence the market.
That's kind of when you find that balance between like historic data.
In my opinion, right? Back in 2020, when COVID happened, I think that the market was already on its way to recovery.
Yeah.
I think that recovery was coming here after this retest and reclaiming the 50-week moving average, which historically has been a good thing. but then we had this, this thing that nobody could have known was coming. And that changed, and that changed a lot, right? So had this not happened, would Bitcoin have stayed on this trajectory and done something, something akin to this, right? And that's just rough, but something along those
Right.
lines. Would it have really changed a lot? Don't know, right? Not worth speculating. But the fact that this changed and the circumstances that were around it changed everything since then, right? It gave us a huge spike in unemployment instantly that quickly recovered. It was a very hard and short recession. It gave us supply chain issues. It gave us remote working. It gave us a ton of money printing of QE, right? And so we had this V-shaped recovery. And I think, I don't know about you, but I marveled at how well the market recovered from this.
Yeah.
And this, this of course feeds into the "if I knew then what I know now" narrative. I wouldn't be sitting here with you guys. Nope.
Well, aren't you in a way glad then? Don't answer that.
Yes.
Mark, I had a couple of things. Keith, if you don't mind me, I wanted to talk to you guys about a couple of things that I had noticed. I know we had spoken about the ETFs a little bit, right? And I know you're not following ETH as closely as you are Bitcoin, Keith. Maybe Mark, and I don't know. There were two different tweets that I had seen. Let me just pull them up on my own screen really quickly.
Sure.
Well, I'm not going to pull them up, but let me see. Okay, I'm just going to talk about them. One was a chart that they had called the dead heartbeat chart, which I'm assuming is not an actual real chart or sort of signal of any sort of trend or anything like that, but they called it the classic dead heartbeat chart, and it is the signature shape of dying shitcoins fading into irrelevance. Now this happens to be the ETH ETF flows, outflows, inflows. I mean, it is, and I'll share it on my
share that
share
chart
it here in the comments.
Let's see it. I want to see the dead heartbeat chart. I've not heard of that, but it's a great it's a great analogy.
You know what I'm going to do? Keith, can I send it to you? Would that be, do you mind if I do that? Maybe
Sure.
You can just pull it up for me. Okay. Let me send it to you. Okay. I just sent it over. But it was almost kind of, I mean, it was interesting because we talk about the ETFs. We talk about Bitcoin, obviously, more than we talk about Ethereum. We talked about the demand that we were kind of seeing or lack of, right? That's pretty dead. No?
Yeah. What is, oh, maybe they have this on the, let's see if I can find this here. I have the far side.
Yeah.
Stuff.
Now, Mark, this kind of comes into, I also noticed something else where this is more, DeFi related. So I wanted to wait for you to touch on this. But I thought it was interesting because while we're seeing this, we're still seeing this demand on like the DeFi side, right? And one of them specifically that caught my attention was just a couple of days ago, 2 days ago, there were two big withdrawals from Aave stables that had turned around and bought ETH, and that totaled $19-20 million, right? So we're seeing this lack of interest here. Then we're seeing this interest kind of in our world, right? Do you think it's just sort of these are big ETH maxis buying this dip?
Yeah, it's impossible to say. And just because whale accounts start buying tokens doesn't necessarily mean those things are great investments.
Yeah.
But yeah, I think that there is a cultural aspect to it The people that have been around in Ethereum long enough to be able to have millions of dollars of stables in something like Aave. I think do take it personally that like Solana has outperformed Ethereum the last couple of years, and that a lot of the layer twos are outperforming Ethereum now, both in terms of transaction volume and transaction number and unique wallets and that kind of thing. Like there is a sense among the Ethereum community that Ethereum is losing relevance, which is the first time that Ethereum has been in that position. Because for the longest time, it was not even questionable that the overwhelming majority of blockchain use cases were on Ethereum. I remember the days where, when the Bitcoin maximalists were getting insecure, because whole days would pass where not a single Bitcoin transaction was being processed. Like it was, there were times where Ethereum looked to be threatening the credibility of Bitcoin. That's no longer the case now because it's all of these other competing layer ones, but then also the scaling infrastructure built on top of Ethereum that is now siphoning what is perceived to be the value or the intrinsic use case away from Ethereum. I've seen more and more of these tweets.
If they're built on Ethereum, though, I mean, Ethereum is still very much relevant.
Well, maybe not. But the point is that Ethereum doesn't. Ethereum is putting in the work to secure those layer twos. Yeah. At least that's the narrative. But it doesn't benefit from it at all, right? There is no, Ethereum, remember, is an elastic sort of supply token still. And so unless people are paying the gas on that network to deflate it, and remember, Ethereum was always an infinite supply token. So up until, I think it was the Shanghai fork, Ethereum was just being printed out as block rewards for forever. And it was only after they introduced this this gas burning model that they were trying to lean into, you remember, like ultrasound money. You would have seen this is how the Ethereum Foundation was trying to position and message the token and that kind of thing. And I think that they're kind of borrowing, at least partly, from the Bitcoin playbook, though. Because one of the things that everyone knows about Bitcoin is that it's got a maximum supply of 21 million tokens, and that it's, even though it is still an inflationary token until those 21 million Bitcoins have been realized, the inflation is diminishing over time. And we already have the vast majority of Bitcoins produced. And so, its inflation is de minimis now. Like most of that inflation is behind us. Whereas Ethereum for a while was becoming deflationary. But now, because most of the activity has moved onto its layer twos, it's now started to print more tokens again. And so the Ethereum supply is now going back up, whereas it's been trending down for a large, a long length of time. And so that is now attacking the credibility of this ultrasound money narrative, and people are feeling that. And so you may find that people who are deeply entrenched in that Ethereum, that Ethereum narrative, may be wanting to defend it by doing things like absorbing some of the selling pressure from the token by buying it back from the market. But people do this religiously, like these aren't just investors, right? Or capitalists. These are people that are, have a very deep spiritual connection to the blockchain of their preference. And the same is true of Bitcoin as well. Like people will come in and buy, tens of millions of dollars of Bitcoin, to try and prevent its price from depreciating too quickly. So it's not unique to Ethereum. But I do think that there is, what people on Twitter might call COPE at this point, where because the ultrasound money narrative is starting to lose credibility. The ETH ETFs, which is the graph that we're now seeing on the page right now, seems to have garnered virtually no interest, and nothing compared to what Bitcoin was able to garner in terms of interest. So there are, people I think are feeling the squeeze, and
Keith, are you showing all
kinds of things?
Yeah. Oh, yeah. I can see that for sure. Are you showing the same thing? Because you pull up a different sort of chart when we look at the ETFs.
Number one, I love the term dead heartbeat because This chart is, now that I know what I'm looking at, this chart is pretty remarkable.
Yeah.
Or unremarkable, I should say, if you're an ETH investor.
It's remarkably unremarkable.
Right, but there's some things worth noting here. First of all, this instrument has only existed for 5 weeks. And so we're basing everything off of its first 5 weeks while the market is in a downturn and lots of uncertainty hovering around us. That's the first thing. The second thing is all of this red, all of this sell pressure comes from one spot and one spot only. And that is Grayscale. Now, Grayscale made, right? So they created another product. You look up here and look at the fees on these products. This is Grayscale's original ETH trust that they converted into an ETF. 2.5% management fee on this, which is exactly what they were doing with the Bitcoin trust that had all the bleeding. So
it's like 10. Is that like 10x higher than any of their competitors?
Yes, it is.
Looks like it.
The highest, the next highest is a quarter point.
So yeah, on my screen, the white on gray is a bit hard to read, but in general, Grayscale's fees are like
BlackRock is a quarter point, Fidelity is a quarter point, Bitwise is 0.2%. ARK Invest, oh look at them, 21 shares, they go with 0.21%. How cute. And so yes, they're 10x higher than anybody else in fees. So they came up with a brilliant idea to launch an ETH mini ETF with the lowest fees in the game to see if they could stem some of the bleeding and maybe get some market share from some of the other players. Well, they seeded that, by the way, with 10% of what they had over here on their ETH trust. So they took this $10 billion fund and made it a $9 billion fund and put $1 billion of it over here. And so it looks like they have a lot, but they really don't. And all of the sell pressure, literally all of it has come out of this Grayscale product. Of the other ETFs, which, arguably they haven't bought a whole lot. Of course, BlackRock is the anchor with, they bought the most, but they haven't sold any of what they bought. And what the others have sold has been negligible. So I think it, is this already just a great signal and all we need to know, or is it really early to make that determination because we're looking at a baby?
Right. 5 weeks is no time at all to be making that.
The Bitcoin maximalists would say, look at, compare it to how Bitcoin ETFs performed in the first 5 weeks. Like I think that it's uncontroversial to say that this chart is like not impressive,
No.
But
I think it's also safe to say that even on its best day, nobody expected the ETH ETF to do 20% of what the Bitcoin ETF did or is doing, and this may even be at this point it looks like it's a lot less. And so does the ETH narrative hold up? As its utility that's being used for all these other blockchains, or like Mark said, is it
losing relevance?
Are the value propositions that ETH once had fading, and this chart is indicative of what's to come?
And by the way, I'm not advocating for these things that I'm saying. What I'm saying is this is what the market is concerned about. When I'm reading what people are posting on Twitter, what I call like the cope or the fear or the panic, this is the kind of sentiment that's being expressed across the board.
I didn't realize you put so much into crypto Twitter, Mark. He knows I'm messing with him because he doesn't. But when there are discussions that come up, though, like you can see the difference between that sort of, I'm doing this to instill something, and then I am concerned when it becomes more of a discussion, right? That's when I really start to pay attention to it. When it's that back and forth and there are different actual points being made or concerns being raised. So I get it. I didn't want to pass up the opportunity to give you a hard time.
I totally understand.
This is, I love this chart, by the way.
You just love the name of it.
Yes, I do. And it might mean, and listen, I am not an ETH maxi. I barely trade ETH at all. I do. Unfortunately, I do have a little bit, banking on this, possibly doing something over time, longer term position, I should say, and my hopium is in the fact that we're still in a, we lost a lot, really. If
Yeah.
I was smart, I would have bailed out of this a long time ago. I was probably traveling or something. But nonetheless, this was a bad sign, losing the
You're
trend.
supposed to
And this
call me when you
breakdown
go
was bad.
traveling, man.
What's that?
You're supposed to call me when you go traveling so I can exit all
Right.
of my positions.
Right. I'm going to send you my itinerary.
Thanks.
Keith, what was it? Or do either of you recall, what was that, August 3rd? What happened August 3rd that caused that?
It was August 5th. It was the Bank of Japan increased interest rates,
that's right.
and that
Okay.
unwound the Japanese carry trade. And a lot of people speculate that the reason it happened, the reason that crypto took such a big hit, is because that was the first asset people could get to, because TradFi wasn't open yet, banks weren't open yet, and so this happened in the middle of the night, and that's why crypto took such a big hit.
I didn't realize it's already been a month.
If you zoom out a little bit, so Keith, can you convert this to the monthly chart for ETH? What's interesting is it's sitting at like a really important historical support level from the top of the last bull run. And if you check the MACD, you'll see that it's actually just turned bearish as well. So the momentum on the price is turning around, and we're currently sitting at the technical support level that we held through, I think, something like April of 2021 up until May of 2022. And it's just, there's a confluence of factors here that make this chart look very unattractive. And I that's not me picking on Ethereum. For those who are watching this call for the first time, I've been bearish on Bitcoin for the longest time now. And I said the same thing about the Bitcoin chart just recently, that it looks like its momentum is heading down. But yeah, Ethereum is no exception. You can't really just rotate out of Bitcoin into Ethereum at this point, because we're at critical support and momentum turning around. You can see the fast moving average, the blue line there, sloping into the orange one on the MACD.
Right.
And once it crosses there, it tends to continue down. Like the monthly oscillation is much more predictable than any of these shorter time frame ones. And this is at least signaling to me that we're heading into a multi-month downtrend. I have no idea where the bottom on this is going to be, but I would be surprised, or it would be statistically very unlikely for the price to suddenly turn around and explode to the upside after something like this. It could happen.
If there's a silver lining on that cloud, right? It's going to take a month. It's going to take it at least through this month for that to develop and cross, right? And so we do have support at this 50-month moving average, which, as you can see, is pretty important. So and now back above the 21-month moving average, which also pretty important. So I would be looking to these. A breakdown below that is probably catastrophic for ETH, right? A break below that 50-month moving average looks horrible. See what that looks like on the weekly. 200, the 200-week moving average is right there at around 2,300. You lose these, it's done, right?
Yeah. The technicals are looking very, very weak. I think they're looking weak on Bitcoin as well, but Ethereum is looking especially frightening.
So what are we doing? Buy orders?
Buy orders, yeah. And
not financial advice.
Not financial advice. Not financial advice. But
Make
you
it
have a
clear. I
look.
joke about it, but for real, right?
what's your target for ETH on that situation? I know your target for Bitcoin is down in the 20-25K range. What's your target for ETH?
12.
I think I think ETH will, like, with 100%, like, in my view, that, like, my conviction is 100% is what I should say, that ETH will see $1,200 like in the not too distant future. After that, it's really hard to tell. Like, I think that I think that there's going to be a strong psychological support at 4 figures. Like, I think everyone would start to feel very upset if we started to see a 3-digit ETH again, but I'm not ruling it out. But let's put it this way: once we get to the $1,200 mark for ETH, my appetite to buy it again is going to start going up dramatically.
That
Once
is
we
the
get to 1,200, it's not like you're going to start scaling in at 15 or something. Set your range order.
No, like, I think technically, so yeah, for a
Wow.
range order, yeah, for like, I would be ranging starting from 12. My
Wow.
appetite to buy ETH tokens won't really start again until we get back to that level. And it's because I'm so like, there isn't a whole lot of structure underneath us.
no,
So
there's
maybe
not.
there really isn't. So yeah, I think that if it starts to trend down, remember ETH moves with
No, but
the
no, but I would say $103 looks good.
It's amazing. Yeah, but
I'm
yeah,
so
you know what I
sorry I
mean?
asked you about ETH.
Yeah.
No, I mean, this
I
is an opportunity, though.
No, that was
You know what
probably
I mean? We
that was
don't
probably a
talk
little
about it.
aggressive. How about 131?
I think there's actually there is good reason. If you have a look at historical confluence, somewhere between $400 and $500 is actually not too bad at all. But do I think, like, I would be very excited if we ended up, heading down that far. I'm not. I think that it would be extremely greedy to wait for a $500 ETH more than my $25,000 Bitcoin. But yeah, I think there will be a time, and we'll see Twitter going nuts at it when ETH is testing 3 digits again.
And
I think it's going to make a lot of people really frightened, and that's generally the best opportunity to take an entry.
be greedy when people are fearful.
Exactly.
I mean, I understand that. I don't think I was expecting that. So you caught me off guard for sure. It definitely doesn't look strong. I don't have the sort of knowledge that you guys do, of course. Like,
Well,
I
and
admit
there's
that, obviously, right? But it's not looking strong. But I wasn't expecting 12 to be the start of your interest.
yeah, so, like, that's 50% from where we are, pretty much.
And look at ETH BTC. It's already lost everything.
Yeah, let me check my channel on that.
I could see going to 36 from here. I mean, 40 may where's this wick go? 40?
Yeah, we're actually right at the bottom of the channel.
So this could be it, right? This could be it, but it can also be lower. It could also be.
I mean, from here, let me see. From here to get, like, actually to the bottom of the channel is about another 6% down. So we're more
So,
like
Mark, you were talking about
channel.
trading ETH WBTC previously.
Yeah.
Right?
Yeah,
Is
so
this
this is
something like looking at your chart right now, or where you have that channel, right? Because you've been talking about this sort of buy low, sell high repeating pattern, right?
Yeah, so
you starting to get nervous on that?
You said 6% down from here, Mark, and that takes us exactly to where this wick is, right where we were at about 0.04.
Right. Yeah, and so it actually in this, so if I was not, let's say that you were of the mind that you didn't want to exit from exposure to digital assets, and you wanted to maintain exposure to Bitcoin and ETH. just speaking to the channel that we've been discussing for the past few months now, actually since the beginning of this year. Yeah. No,
Yeah, you've been
even,
talking
yeah.
about
Okay, since the beginning of this year. So we've actually, you could have executed a trade across this channel 1, 2, 3, 4, 5 times with an average profit margin of 13%. And that's like that compounds very quickly. So like it's a fairly significant it's a fairly significant profit margin. So I'm miscounting that, by the way. This was going back to June of 2023. So this year you would have been able to do it
this year.
2 or 3 times, which is not terrible. And yeah, at the moment, it's like, this is, if you were trading that channel still, this is technically where you would rotate Bitcoin back into ETH, and then wait for it. Wait for a, let's see, yeah, about a 12% upside from here to rotate ETH back into BTC.
Well, 17% would get you back to the 100-month moving average.
Oh yeah, I've got to turn on these averages. I haven't looked at them in a while.
I'm still surprised by this 1200. I'm curious what the viewers think. I'm curious if they look mostly at Bitcoin or if they look at Ethereum and some others as well. Like, I wanted to ask Mark about some different altcoins and stuff, but we've already gone over the hour. Thank you guys for sticking around. So maybe next week we can get into those a little bit also. But I'm curious to see what the viewers are thinking as well, especially in terms of Mark's confidence at a 100. 10-10 confident that Ethereum is hitting a 1200. Well, any final thoughts, you guys? Or Keith?
Yeah,
or Keith,
if Mark is right, I really need to
know.
get out. I really need to close my ETH trade.
Well, I mean, it depends. Like, I think from here we should expect ETH to rise versus Bitcoin briefly. I just don't think it will. Like, this isn't going to be ETH's breakout moment. The market is way too bearish. We're kind of deep into the cycle. If ETH was going to make a new all-time high versus Bitcoin, and I still think that one day that will happen, I just don't think it's going to be before the end of this year. I think that it will rise from here. Like, if ETH continues to drop from this point versus Bitcoin, then there's actually a long way down. We might be headed towards the lows from like 2020 versus Bitcoin, which would be pretty depressing for the Ethereum community, I think. I don't think that we're going to break down from here. I think that Ethereum will rise back up. I think it's going to make about a 10% to 12% gain versus Bitcoin in the coming months. And then from there, it will drop again to the bottom of the channel again. It's just, that's just how these channels work. One day it's going to break to the upside or to the downside. I just don't see it breaking to the downside yet. Having said that, I think that both Bitcoin and Ethereum are going to break down versus the US dollar.
Well, if it drops from here, then you're getting your 1200.
Yeah, I think so.
Yeah. All right. Well, I'm curious to see where that brings us next week. Right. Thank you guys so much for joining me. Keith, it is always a pleasure. I'm glad that you got out and got to do some fishing and enjoyed your 3-day weekend. Mark, thank you for joining us. I know that you had some obligations prior to, but
Yeah,
I'm glad that you were able to make the second half of. No, I'm glad that you were able to make the second half of the call. So thank you. Keith, you look like you want to say something.
leave us.
Go ahead.
I'm going to leave us on the on your dead heartbeat chart for the ETH ETF. I think that's a fitting way to wrap this one up.
I hope you think of this dead heartbeat every time you see anything like this from now on. It is very fitting.
That is scary. All right,
all
guys.
Right. Well, thank you guys. Thank you to all of the viewers. We will see you next Tuesday. I hope everyone enjoys their week and weekend. And any comments or anything, leave them for us on any one of the destinations we stream to.
All right. Thanks, guys. Have a great day. Have a good rest of the week.
Thank you. You too. See you guys.